According to an article in the New York Times, Wall Street is still as dirty and corrupt as ever, even according to Wall Street itself. Interesting. A new report from the University of Notre Dame that was done on behalf of the law firm Labaton Succarao had a questionnaire of about 1,200 traders, portfolio managers, investment bankers, and hedge fund managers, and they asked them about different questions related to Wall Street, different to industry plans, and whether or not they were playing by the rules or if anything has changed because of the new rules after the financial crash. So here is some of the numbers, or here's some of the questions from here. This basically, they have witnessed about a third of people who said that they made more than $500,000 annually, according to this questionnaire, contend that they have witnessed or have first-hand knowledge of wrongdoing in the workplace. Well, that's really interesting. Now, nearly 1 in 5 respondents feel financial service professionals must sometimes engage in unethical or illegal activity to be successful in the current financial environment. Now, that's interesting because since 2008, since the crash in 2008, since Wall Street was bailed out by the taxpayers, we haven't done anything really to attempt to clean up Wall Street. There was some regulatory reform that was passed called Dodd-Frank. It wasn't very effective because it, first of all, was watered down when it was passed, and then it's been systematically chipped away at. So leaving a lot of these Wall Street firms to continue business as usual, the same kind of business as usual that led to this very crash of 2008. And of course, asking all these professionals who work in Wall Street whether or not it's changed, you're getting the answers of no, it obviously hasn't. I have more respondents to these questions here. 1 in 10 said that they directly felt pressure to compromise ethical standards or violate the law. Man. And nearly half. Now, when we talk about regulation, right? When you talk about regulation when it comes to pundits on Fox News or CNBC or Fox Business, or even to the heads of some of these Wall Street firms like Jamie Dimon, when you talk about regulation, they're like, oh my God, we're so overregulated. We don't need any more. We already have so much regulation on us. In fact, you need to eliminate some regulation. But interestingly enough, over half of the high-income earners say that law enforcement and regulatory authorities in the country are ineffective in detecting, investigating, and prosecuting securities violations. So here's over half of people polled that actually work on Wall Street, who work in these big banks, that say that, look, the regulation that we have is absolutely ineffective. It doesn't do what it's supposed to do. It doesn't do what it's supposed to do by design because it's been watered down by lobbyists and politicians that work for the banks. Remember Dick Durbin, the number 2 Democrat in the House, or I believe it's the Senate, said that, frankly, the banks own the place. So really, it's not surprising at all. As I said, you ask Jamie Dimon, he's like, no, everything's fine. In fact, we need less regulation. You need to free the market. Let's free the markets. Well, here's over half of the employees polled saying, no, the markets are too free, and we're compelled to do illegal things, illegal or unethical activity to get ahead. This is Gordon Gekko's Wall Street all over again, or The Wolf of Wall Street, if you want to go a little bit more contemporary. All right. Now, there is a little bit of an asterisk on this study, all right, in the New York Times. Now, they say every report has an asterisk of some sort, and this one does too. It was conducted by Notre Dame and surveyed a large number of people in the industry, but it was paid for by Labaton Succarao, a firm that often represents whistleblowers in cases against the financial services firms. So there's the caveat. I don't really think that that's a big caveat. I think that it's important to disclose, however, that the firm has a little bit of a bias in saying that we want whistleblowers, we support whistleblowers to come forward and expose these illegal, unethical banking practices. But I just wanted to get all the information out there. Now, many of those asked said that they were worried that their employer would likely retaliate if they reported wrongdoing in the workplace. If they became a whistleblower, they were worried that their employer would retaliate, probably by firing them. And quite a few of them said that they had signed or been asked to sign a confidentiality agreement that would prohibit them from reporting illegal or unethical behavior to the authorities. That's amazing. Here, sign this. Sign this confidentiality agreement to say that you're not going to be a whistleblower in case we do something illegal or unethical to make more money. Sign this. And if you don't, we're going to retaliate, possibly by firing you and never letting you get a job on Wall Street. And, unsurprisingly, many respondents said that they would use non-public information to make a guaranteed $10 million in profits if there were no chance of getting arrested for doing insider trading to get that money. So that's part of the culture of Wall Street. I would break the law. I would do insider trading if I had no chance to get arrested to make $10 million. That's an easy one. I think a lot of people would do so. Let's be honest, that's human nature. Of course, if you have no penalties, if you know that you're not going to get in trouble for it, I think a lot of people would take that bet and take the 10 million using an unfair advantage that they have over other people. This is why regulation is so important. This is why we need cops on Wall Street. And what Wall Street is trying to do is get rid of those cops. And what happens when you get rid of the cops? You let the robbers run the place. And that's exactly what's happening on Wall Street. And it's exactly what our politicians and money in politics is allowing to happen on Wall Street. Really, really is disturbing. And so no, when you ask the question, have the banks learned? Have the people on Wall Street gotten better since the financial crash? Have they learned their lesson? The answer is a resounding no. And that spells trouble for all of us.